Hey guys, welcome back. In today's video, I'm going to give you a quick 5-minute Bitcoin TA video, break down exactly what you need to know, exactly what you need to look out for. I've sent these two messages in our WhatsApp group, and so today I was not going to make a Bitcoin TA video for you guys, and I was just going to send this message to our group. But I realized a lot of you who are following, you're not in the WhatsApp group, and so that means you're probably not going to know exactly what to look out for. So today, guys, if you haven't joined our WhatsApp group, make sure you get in as soon as you can. Okay, like as you're watching this video, as soon as you're done watching this video, so that days that I don't make videos, you're up to date and you know exactly what to look out for. Okay, so let's get into it, guys. First message here: watch for BTC to break above 56.2 resistance finally in the next 24 hours. That should begin the next up move. So let's go ahead and start explaining that. The resistance we talk about when we say 56.2 is roughly around here. Okay, let's say right there. Okay, so we've just been stuck in a range here for the last 3-4 days. I mean, it's been boring as shit. Okay, and that's actually super bullish, super impressive, because typically after such a massive run up, you should see some sort of pull back. You should see what we call selling into strength. You should see people taking profits and people satisfied. But people are not satisfied, whether that's institutions or retail traders, and they continue, for the majority of people, continue to hold here at these levels. And we know that. Why? Because after that massive run up, the best we could pull back was 1,000, 1,500 points. So that's highly bullish. What we're looking for right now is a break above this key level, a retracement back to test it as support before we take off higher. Okay. Now, important to note, you have this key fib level right here at 57.1. So our upside may be halted quickly once we break out. So I'm thinking, all right, we may break out here, hit the fib, come back down, retest trend line, and then pop up. And so, guys, we are obviously overall pretty bullish on this channel. And so right now, what's important to understand is that this movement, this pattern right here, only adds to our bullishness. And so, guys, if we do get a dip, that is going to be a beautiful and fantastic opportunity right now, because these key and subtle behaviors that you have to pick up on, right? After such a massive run, it's unable to pull back. That's a highly bullish characteristic, and it signals to you the strength of this market. It's a lot stronger than a lot of you think, who think it's a bear trap. But here's the problem with thinking this is a bear trap, guys, is you can keep saying that all you want. But the truth is, you said it's a bear trap here. You said it's a bear or bull trap here. You said it was a bull trap here. You said it was a bull trap here. As soon as you see it starts turning down, you said it was a bull trap here. You're still saying it's a bull trap, and you're still saying it's a bull trap. So it's not really a good strategy to just continue saying it's a bull trap, because eventually it will dip. Eventually it will crash again. And eventually you're going to say you're right, okay? But the truth is you're missing out on tons of gains, tons of opportunity right now. And you got one coming up here on this example I've shown you. So most likely break above to that blue fib level, back down, and that's where I'd be looking for further upside, guys. Now, on the opposite, when we're talking about support, we can see that the 53.7 level is a key support. So if we go back right here, same support at 53,700. Very snail-like few days, just stuck in this range. The fact that after such a massive run-up, right, like I've shown you, it's so reluctant to dip, and that's what makes you way more bullish. Okay, so we thought that we had a potential head and shoulders forming here. I mean, it looked really good. The only thing that was missing was the volume. So we had a shoulder right there, head right there, and guess what? We're curling down. It's looking really good. Okay, but the volume was just non-existent. Nothing that was really confirming that. For example, in the left shoulder, look at the volume here. Okay, and so when you're in the right shoulder, to confirm a breakdown, you want to see the selling volume, the selling pressure actually accelerate, and it should be just as high as the left shoulder or even higher to confirm to you that you're actually going to break down. So it's just very weak volume, unable to break down, and what does that tell you, guys? That this thing doesn't want to move lower. And so you can continue to be biased, bearish, right? You can continue to say it's a bull trap, but we can see how that's working out for you if that's what you've been saying. So understand what the charts are telling you, and that's exactly what we understand here today. So final thing, guys, is obviously if we can break this 53,700 level, you would expect a price target of around 51,000. Reason being, You could call this a triple top, you could call it a double top, but when you break, okay, basically you can take a measured move from the top down to the double bottom, okay, which would be right there. You can drag that down, and where does that get you? Right down here to 51.2, which would be a previous support and fib level right there, guys. If you break this level, guys, that is for sure, okay, going to lead to a drop down at 51.2 in my opinion. And now the opposite is true, guys. I mean, if we break out here, I think we're about to go for that next move higher, which is just absolutely incredible because, I mean, holy moly. This, you know, it goes up. And here's that last example we actually saw. Massive run-up. Look what it does. It goes sideways for 3 days and pops higher. Look, massive run-up, goes sideways for 3 days, and we could be getting that next pop higher. So the key is to pay attention to this range, guys. It's all about the range. Which way do we want to break out right now? For example, right now, you don't want to be entering at resistance, okay? A lot of people see, oh, it's going up. Let me go bullish. Let me enter long right now, okay? Really, the time to enter long is down here. Okay, the time to short is up here, and then actually cut a loss when you break out, okay? Because the probabilities are usually higher that it's going to just stay in the range. Because, for example, 1, 2, 3, 4, 5. So 5 times, okay, it just stayed in the range. But imagine there's people who every time say, oh, we're going to break down. Oh, we're going to break up. Oh, we're going to break down. Oh, we're going to break up. So the best strategy is to stay disciplined, take your profits, and cut your losses accordingly to those key levels, and wait for the breakout. If you wait for the breakout, you're going to have a much higher probability of success. So guys, did I not just tell you, okay, the key is to not FOMO in when you think it's breaking higher. I said, look, everyone's going to think, oh, we're breaking out higher, right? And look what happens. They dump it on the retail traders or whoever thought it was about to pump higher. Okay, so that's why you got to stick with the plan. Don't let your emotions come in the equation. You know, as I'm making this video, it looks like it's breaking out higher, right? That's why you stick to your plan, okay? Because the truth is, right, a lot of times you get emotional even though you know that, hey, it's unlikely to break out right now, okay? Like I just said, it's more likely to stay in the range until it's not in the range. You're much more better off staying disciplined and staying with the range 1 time, 2 time, 3 time, 4 time, 5 times, 6 time, 7 time, and now 8 time. You see what I mean? And you know what? Maybe on the 9th time, 10th time, we do indeed break out. But look how many trades you'll win if you actually stay disciplined. And instead of thinking that every single time it's going to break out or up or down, you just stick with the range. Okay, it's going to win you way more times than you trying to think that every time it's going to break down, guys. That's one of the hardest lessons you can learn as a trader. And that's one I've learned the hard way for sure over the years. So guys, hope that helps you. That's our video for today, and that is what I think is the most likely scenario, is going to be a breakout higher here with some time near the time that stock market futures open is where I'd expect a move to be made. But at the same time, guys, if we break this support right here, I am absolutely looking to go bear and short this down to our targets of 51.2. And then obviously you guys know what I think is the most likely scenario is a bullish scenario. But like I said, I'm not going to just stick with my bias of just being so bullish, guys. Because a breakdown of this key support, guys, then that's telling you something different. It's telling you it's time to fucking short it. So guys, hope you enjoyed this video. Once again, join our WhatsApp group if you haven't already so you can get the updates there. I will see you on the next one. Take care. Drop a like on this video, and I'll see you on the next one. Bye.